Late in 2023, on a Friday night, I started talking online with Robert Andjelic, Canada's largest farmland owner. And on Saturday morning, we recorded a 3-hour podcast where he laid out his whole life story and his thesis for the future. As a boy, he escaped communist Croatia, hidden in a hay wagon, across the border at night with dogs and gunshots behind him. He landed in Canada with nothing, and in the rough end of Winnipeg, he grew up a fighter, defending himself from the bullies. He built a commercial real estate empire, and he sold out before 2008, before the crash. Then he took that fortune and he doubled it trading rare earth mineral stocks. And in 2010, he turned to Saskatchewan farmland to build a lasting legacy for his family. And he bought his first 80,000 acres-ish, as he recalls, with cash. Back when it was 400 an acre, and maybe not everybody wanted it. The rest is history. In January of 2026, he came back for a record-breaking room, and he called a capital squeeze. And the over-leveraged were about to feel the ground move beneath them, and then the headlines have started, and let's face it, they haven't stopped, have they? Have they, my fine friends? Now, in May, Robert called me up, all fired up, maybe like I never heard him before. He said he was practically floating into Tim Hortons for a tall cup of black coffee. And typically he's one of the most bearish people I know, not in nature, but in prediction. But for the first time in years, folks, he had some really good news, and he was excited to share it. Canada's largest farmland owner has turned very bullish. So now he's back in the chair. He's still bearish on the economy, but bullish on farmland. It's always a singular bet going forward. That's all he's in. He's all in, all of his chips. This morning, we're going to hold him accountable for 3 years of calls that he made. He said, Dan, take the gloves off. Don't go easy on me, he said, Danny boy. So that's what we're going to do today. Welcome to the show, Robert.
Thank you. Nice joining you again, and the rest of the people tuning in.
Yeah, we got a really great crowd this morning. There must have been some rain out there, or people just want to hear what you have to say, Robert. I appreciate you coming back on. Just a little bit of housekeeping before we get into it, folks. We are live on YouTube right now. Please like, subscribe, turn your notifications on. Good morning, Jason Dearborn. Thanks for starting out the chat. You are not the shy one. I appreciate you. I listened to all the amazing things you had to say for an hour the other day. That was well worth my time. I'm going to have you on the show. Liking, subscribing, and turning your notifications help put us in front of other producers. And I was telling Robert this morning we made our first $29 on YouTube. And it's all because of you, fine folks. So if you know somebody sitting on a piece of land trying to decide whether to buy, sell, or hold, share their stream before you do anything else today. So my name is Dan Aberhart. I run Growing the Future, Western Canadian Agriculture's foremost live briefing platform, and its foremost AI training platform for AI ag operators. Please join us. I grew up alongside a farming operation that today runs over 20,000 acres. Everything that I do lives at growingthefuture.ca. Check that out. I just did a little cinematic push on it. Chat and Q&A are all open. I'll be pulling from it as we go. Feel free to divert my attention from the conversation with Robert to answer your questions. You come first. If you're really brave, put your hand up. Harry's already got a question, but just let me get through these housekeeping. And I want to know where everybody sits. Where do you sit today? Where do you sit today? Are you bullish? Are you neutral? Are you bearish? Let's do a before and after. How many folks do you think would be bullish today, Robert? What's your prediction? Versus neutral versus bearish on the call?
Well, most people look at the past, of course, and that's what governs their income uh, so far. And to be bullish, you have to look at what's coming ahead. And are you prepared for that? And can you take advantage of it? So I don't think too many people would be bullish today, as opposed to, let's say, a year or two from now. I
Yep.
anticipate that a lot more will fall into the bullish category year and a half, 2 years from now. In other words, late 26, 27, 28.
I'm going to reveal the results here shortly. But first, I just want to thank my sponsors that make this channel possible. And I've included a link in the chat that has the Andjelic record marked to market. How did Robert do? But if you go in there and you scroll all the way to the bottom, past all that vital information that I'm sharing with you free of charge today, you'll find my sponsors, God bless them. Crop Aid Nutrition, Soil Health, Hammond Realty. Tim's been an amazing thought partner and leader in the real estate business. Myers, Norris, and Penny, thank you. We're doing a benchmarking series soon to launch. Grip, okay. A grip.ag, QR codes to run your farm. Bone Trail Originals, to appreciate the people in your life personally and professionally. And last but not least, Convergence Conference 2027, February 2nd to 4th in Regina. Robert, you're going to be there again. We're going to rub shoulders with all the brass in agriculture, everybody in agriculture. We already got some questions coming in. What I want to share with you folks today too, and I think I'll put it up on the screen. So first I'll end this poll and share this with you. And we've got a lot of good questions coming in. Share results. What percentage bullish? 24% of folks are bullish. 49% of folks are neutral. 17% are bearish, and 10% are gonna wait to see what you say. So that's great. And I want to put this up on the screen for everybody quick here. You and I are going to cover some ground, my friend, this morning. One of the things that you wanted to do was cover past calls. Okay, I'm just going to put this up here quick, and then we'll get to some of the questions. The Andjelic record. We've got 8 different aspects. Okay. So I'm just going to put that up there. But Robert, let's take a few questions from the audience here quick. Harry Siemens, thanks for coming on the show. Harry Siemens' first question is, why are farmers 3.3% more apt to take their own lives if things are so good on the farm? How would you respond to that, Robert?
Well, up to the individual and how they handle pressure, and farmers actually have to wear a lot of hats. Like again, I go back to commercial. When I was in commercial, yeah, they had their manufacturing business, and that's all they had to do. They didn't have to worry about disease, crop disease. They didn't have to worry about well, they have to worry to some degree their market, but they usually have a market, but it's not global and geopolitical issues come into play and everything else. So there's a heck of a lot of pressures, no doubt. I'd say it's one of the most demanding industries in the world, right? Farming. And if like even credit lines and credit, and is it available, isn't it? What do you have to do to get it? And beside the marketing of the product and growing of the product. So I just say there's just a heck of a lot of pressure from all sides, and very demanding to be a farmer producer.
Well said. Brian Voth is asking, is the question about being bullish, neutral, bearish on ag in general, or about specific commodities? I think I'm just asking the audience, which is largely Western Canadian ag in one way, shape, or form, how you feeling as a litmus test this morning. So we took the temperature on that. Chad Cebulski, thank you for coming on the show. During the winter podcasts, you say we should lock in long-term interest rates. Do you still keep the same message with interest rates?
Well, interest rates are, I look at it globally, okay? So you can't look at around you and what's happening in Saskatchewan, Alberta, Manitoba, or wherever you farm, and extrapolate that, and that's the only meaning of where interest rates are going. Lenders work in different areas, and they want to deploy their money into different segments of the economy. If you take today, Swiss bank bonds are at zero, just about going down to zero or going negative again. Okay, so then you equate them to or look around you, Canada. Canada's at what, 4 or 5%, depends on the term and uh, the expiry, the term, and what's the other one, the whatever. Uh, Depends on the terms, yeah. So when that much money flows into Swiss bonds, that tells you it's fleeing other countries. That usually comes from other countries. That means it's flight to safety. It's not how much can I make, or how much can I make on my investment. It's can I get my investment back. So that says that Canadian, U.S. interest rates should go down, contrary to what they're talking about with uh, a new Fed chair. They're talking about going up, but I think they're going to be forced to go down. Again, it's the global perspective that tells me that.
In the fall of 2023, you said to lock in farm debt 5, 10, 15 years. You had locked in your own 10-year fixed. And what happened was the Bank of Canada peaked at 5% from mid-2023 to mid-2024. Lockers banked the spread, floaters carried the squeeze. You were right about that. That's one of the points from 2023 that we were going to touch on. But rates have been historically low, and even though they're talking about rate hikes in the States, I don't think that's going to suit their plan to get themselves out of the record high debt.
Well, the record high debt, they got different avenues. One of them is inflation. Okay, they inflate or the diminishing power of the U.S. buying power of the U.S. dollar. As I said in previous podcasts, if you go back to 1920 and the buying power, the U.S. dollar has lost 98% of its buying power. So in other words, they're paying you 2 cents on the dollar if that debt originated then. But today they'll knock it off 10, 20%, 30%. So you're getting 50 cents on the dollar. That's the only way I could see them come remotely close to decreasing that debt. Or
So do you look at it that appreciating assets like a land have gone up, or it's just that the dollar has depreciated in value against that? How do you view that?
It's a dollar issue. Gold, land, other things, even commercial real estate, although it's not in the game anymore, not for me anyway, or it should be for a lot of people. It was part of that, but it's the hard assets that you need to in order to protect yourself against diminishing buying power of all currencies, all fiat currencies, doesn't matter whether it's US dollar, the Canadian dollar, the euro, whichever one you want.
Farmers are uniquely positioned to capitalize on that, like almost no one else on planet Earth. Then
Farmers are in the best position, and that's why a lot of lenders are looking to put money to work uh, in the ag industry, even the vertically integrated portion. So there's a lot of money coming in, and it's amongst the uh, amongst their top choices.
Jason Dearborn has two comments. I'm going to read the second one first because it's more topical to what we're talking about. There have only been two world reserve currencies, British pound and the US dollar. These are trending towards a technological paradigm. A deflationary system is replacing fiat currency. This is the rise of blockchain and why Bitcoin in 15 years went from nothing to 1 trillion market cap. My sister had 30 Bitcoin at one point. She doesn't anymore, or I would be rich. I would be rich too. But what do you think about that?
Well, I'm not into Bitcoin. I like hard assets. Okay, so for me to be in anything else, like I said, I'm not into anything. No stocks, no other commodities, nothing. I'm just pure farmland. So I don't think I can really comment on that because I don't know its nuances and I don't know its upside, downside, or demand or anything else, which is what I go on farmland or ag products or anything else.
Jason's also asking, do you have a worry about a geopolitical situation which structures the federal Canadian government to engage in a nationalization process similar to the CWB monopoly, yield and coupon and term? Do you know to which the
Yes, that's
gentleman?
definitely a potential where they may put it in capital controls. Yes, there's definitely geopolitical potential problems. But what they'll do, I don't think Jason knows or I know, because it's up to somebody else to make those calls. But the way the economy is headed and everything else, I do think there will be capital controls down the road.
Harry is saying,
Again,
especially,
globally. I'm
go ahead.
talking Europe, I'm talking US, Canada, and so on, potential any one of those countries.
Yeah. Harry Siemens is saying, especially as it pertains to the so called climate change, which is always a hot topic here in Western Canada. We're we've got we've answered all the questions so far. You're welcome to engage much further. I anticipate there'll be much more conversation, but let's start going through the calls in full. You can follow along, my friends, in the link in the top of the chat. You can open up that document. It's got the detailed mark to market. I sent this to Robert on Sunday, and he said, "Fire away." He asked me. He challenged me. Take all the calls that I made and come prepared to challenge me. So obviously, number one, Saskatchewan farmland still being cheap. It keeps climbing. You said in fall 2023 and repeated it in January 2026. I think people get the impression you're flip-flopping a little bit by the way we've marketed this event, but the reality is you've always been very steadfast about land. So Saskatchewan is some of the lowest priced farmland in the world, underpriced against Alberta and Manitoba on equal production, and it keeps appreciating even when credit tightens. And what happened was FCC Saskatchewan cultivated values up 15.7% in 2023, up 13.1 in 2024, up 9.4 in 2025 for 3 straight years. The national average has been 9.3. Manitoba has been 12.2. Alberta has been 11.4. It's pretty straightforward. It's pretty, maybe seems obvious, and that's where your capital is, the majority of it. You have anything to add there, Robert?
No, it's just that the gap between Saskatchewan farmland, which was amongst the cheapest between the three prairie provinces, is narrowing between Saskatchewan, Manitoba, and it's even narrowing between Alberta and Saskatchewan. So, and that was my original thesis back in 2010 that it had to come up and be reasonably close, again, on an equal production basis. And it's doing that. So no problem there.
You done good on that one. John Gibson is saying, what are your thoughts around the Iowa scenario where the price of Saskatchewan follows that of Iowa farmland 2 years later? Check out Friday's episode on that. We had somebody from Indiana, not Iowa, but similar. Really interesting numbers. We've seen a significant drop in Iowa farmland pricing in the past 12 to 15 months. And by the metrics that we studied on Friday, it wasn't that different. But what are your thoughts, Robert?
Well, I get asked that a lot about, especially by the lenders, why I vote USA. I vote USA mainly because, according to my environmental issues and drought, water availability, and everything else, at that time, I forecast that half of the United States would be out of commission, agriculturally speaking. And like if you think you can look at your drought monitor today, and it's I think like 60% is in drought. So I avoid U.S. I don't track it. I can't compare the numbers. I know that Canada is amongst one of the biggest beneficiaries in the world when it comes to climate change. Now, that doesn't mean that you won't get blindsided by droughts, occasional droughts, or that, but it'll be far less than anywhere else in the world.
How much farmland do you own in good old US of A?
Zero.
Hmm. Okay. That's including Starbucks?
Well, that's a different issue. That's a different company. That's the what do you call those? Jamaica and all those other islands, Caribbean.
You have
Anyway,
some, you
that's
have, yeah, you have some Starbucks around the world, hey?
yeah.
No big deal. Me too. Me too. I got some stocked away there just for a rainy day. Jason Dearborn is saying, further to Robert's point regarding government intrusion, what is our best hedge as property owners? Well, peaceful civil disobedience. Are you going to get in the next convoy, Robert?
I don't know what you can do. They're going to be grasping at straws to get the taxes that they need. So there'll be a lot of challenges forward. So who do they can go? They can only go after the ones with the money, and that's farmers, producers, and successful business people.
Can you get to Ottawa on a Dodge?
Might have to trade it for a Ford halfway between if I want to downgrade. Okay.
I'm telling you, that Dodge is trouble. All right. Robert Sake. Robert, in light of the spotlight being shone on the difficulty of mega farms, do you see the banks getting more jittery regarding supporting loans to farmers?
And well, I got a list here. Like I've sat down and I put a list together for credit tightening and exactly what I mean by credit tightening. If you want, I could go through that list or
Please
do.
do. Please do. Yeah, I appreciate it. That's great. You come prepared as always.
So, what are the first signs for credit tightening? The first sign for credit tightening usually appear well before the recession or major financial stress becomes obvious. In agriculture and farmland markets, the sequence is often quite predictable. Lower loan to value, LTV, this is often the earliest and clearest sign. For example, 75 to 80% LTV becomes 65, 70. Then lenders start asking for 50, 60 on larger or riskier transactions. This forces borrowers to contribute more equity. So then number two would be like more scrutiny of cash flow. Um, Lenders begin focusing less on collateral value and more on repayment ability. They ask for what happens if commodity prices fall, what happens if interest rates rise, what happens if yields decline. Loans that would have been approved automatically suddenly require detailed justification, taking a lot longer, in other words. Increased collateral requirements. Banks may ask for additional land security, personal guarantee, cross collateralization of multiple assets, land, your operating costs, your equipment, and so on, cross collateralized. The borrower may still get the loan, but with more assets pledged. And then it goes on to slower approval times. If any of you have applied for a loan in the last 6 months or a year, even some banks were earlier to address it than others. You know exactly what I'm talking about. Credit committee become more cautious. Credit committees. You start hearing the bank is taking longer. The head office wants another review. We need more documentation. This often appears months before major credit problems become public. Okay, then the next one would be higher interest spread between the GOCAN and the bank rate. The central bank rate may not change, but lenders increase their margin. Example, prime plus 0.5 becomes prime plus 1.5. Fixed rate loans become noticeably more expensive. And then number six, reduced appetite for large transactions. Contrary to most people's thinking, they think the large operators always have an edge. That's BS. The banks are more leery about large operators, and they make them these uh, these items have been implemented, and doubly so for large operators. Okay, so then there's uh, large borrowers often notice tightening first, as I said. Lenders become hesitant about large farmland acquisitions, expansion projects, leverage buyouts, speculative investments. And then they want more loan covenants. New loans beginning including minimum working capital requirements, debt service coverage ratios, uh, up instead of going down, of course, net worth requirements, borrowers lose flexibility. So declining asset liquidity, this is often overlooked. You start seeing fewer bidders at land sales, longer selling periods, and there is longer on the market, more details falling through due to financing. Price may still look stable, but liquidity deteriorates first. So that's exactly what I meant about financial squeeze. It's not all of a sudden they cut it off or something like that. But this is going on regardless of how the commodity prices, wheat, the grains, the pulses perform, because you have to have 1 year of good performance so that before the bank gives you credit for it. So this will go on for, I'd say, at least a year or so.
Robert, you say that banks are less liable to lend to the bigger operators, but in the simplest of terms, then why did they lend them $1 billion?
$1 billion is depends what you're pledging and everything else. He pledged a lot more than ordinary producer would pledge. Okay, so the numbers don't mean uh, don't have to go aren't the item to really tag on to. It's it's the ratios, the percentages, the loan to value, and everything else.
Is having a big farm fail good or bad for us here in Western Canadian agriculture?
Canadian big farm fail,
Yeah.
is what you said?
Yeah.
Well, it's definitely bad, okay, because the lenders all become gun shy, and they have a good close second, third look instead of just without the fail, they would be implementing these items that I mentioned nonetheless, but they're not now they upped it to the next degree with the big operator fail. But there's not a fail yet. They're
Well,
working through it.
that's fair. I guess it depend on your Bill
Oh,
Clinton definition of
CCAA
fail.
means restructuring. That's it. Like
Fair.
Chapter 11 in US.
Yeah. Why do you think then, if it's bad for Western Canadian agriculture, that there's so many folks that I see that are happy to see that not fail, but certainly stumble?
Well, it's
In your
envy
opinion,
and jealousy and everything else, but I don't know. They don't realize that they're just as affected as Daryl is, because once they tighten, they'll tighten right across the board. But that tightening should have been done anyway, and it doesn't matter whether Monette failed or not. This tightening would have taken place because I foreseen it long before Daryl ever got into problems.
well, Robert, sake, hopefully that answered your question. Love to have more, and I appreciate you coming on the show and asking great questions. There's a little bit of a dialogue going deep that's very would be very long to read out about Bitcoin, and I want to answer
Don't know
anybody and
nothing
everybody's
about
questions,
Bitcoin.
but
Don't even
yeah,
ask.
I'm going to defer from that just because you guys can read it in the chat if you want, but there's no question there for Robert, and he has said he's not a Bitcoin. I don't know. Are you Sashitoto Monakamo, the guy who invented Bitcoin, or not? Reveal now.
Don't know anything about it.
John Gibson is
Never
saying
read anything on it. Nothing.
that's interesting. It is an interesting mystery and beautiful work of mathematical art. But John Gibson is saying, do you see a signal where governments will reduce spending, back off taxes, and let the economies function more freely?
Not a chance. Not a chance. Number one, they reduce spending. Where they're going to cut? Uh, Welfare. They're going to cut hospitals, healthcare. In other words, where they're going to cut? They won't get elected. In other words, if they do cut those. So I don't think there's a chance.
I don't see Wob canoe cutting, even though he's a good talker. I actually kind of enjoy his witty repartee, but I don't think there's been any cutting by him or anyone else. Darren Kennett, thanks for joining. Do the lenders get gun shy of lending? I believe that's supposed to say to all farms, or do the lenders just get more gun shy with the big farms? That's a great question.
No, they'll get gun shy everywhere. They'll get gun shy. That's why the guys cheering on Daryl Monette's problems, they don't realize it's going to be their problem because, like I said, it doesn't matter whether it's Daryl or anybody else. This tightening segment would have happened regardless, and it'll affect the whole industry.
Jason Dearborn's asking, in the event of Canadian credit facilities tightening, what global alternatives would you recommend? Is there uh, other lenders out there, or you get
Well,
into
different
shadow?
lenders have different criteria, and they don't uh, necessarily all comply to the same rules regulations, but they do to the rules regulations as far as uh, the Fed and the overseers are concerned. But they have different criteria, lending criteria is what I'm saying.
Yep.
And you have to find what their space is. If a certain bank is overextended in commercial real estate, well, they don't want no more commercial real estate. If they're underinvested in farmland, well, they'll be looking for farmland, if or agriculture or anything else. And every bank is different. And then you have others that you can go to, but they work on a much larger scale. Would be pension funds or life insurance companies and so on. Again, they have a very different criteria again.
Are you a fan of some of these more creative lending practices, say interest only or longer terms?
Well, interest only, they'll apply it, but they need very, very strict criteria on it. Like you have to have a very low LTV for interest only. So instead of the 75, 80, they wanted before 30% or 50% or whatever. They'll give you whatever you want, but all the conditions and terms change.
Do you see federal credit unions getting expanded reserve ratios, Robert?
The federal credit unions, I thought they were under our normal bank act. The superintendent of the Office of the Financial Institutions. I
Riley
don't know.
Wallace is saying, in addition to Rob Sake's question about lending, we have already seen it. Our cloth salesman has said they have lost deals as lenders, mainly FCC, have asked for heftier down payment, loan cap, or outright refusal of financing. Harry Seaman's burning question: how do the so-called biggest farms compare with the regular size farms in production returns, land care, and improved production practices?
They vary as much as like within the framework of the, let's say, smaller farms, let's say 1,000 acres to 5,000. You'll have the same type of producers and economically viable as in the big ones, and vice versa. So it depends on the individuals. It's got very little to do with size.
We've got some chat going on about the credit unions have been provincial, but some are becoming national now. Provincial ratios were 1 to 6, where banks are 1 to 17. Will there be a change?
You're talking capital reserve ratios.
Yep.
I wasn't familiar. I thought the credit unions had to comply to the same regulations as the federal banks.
Ken Modiak is saying credit unions are usually provincially regulated, not OSFI. So we'll leave that for now. Logan Hammermeister, welcome to the show, is saying, agreed, Harry. What are their crop rotations? Wheat, canola, opening the door to clubroot due to financial stresses, chasing dollars to keep heads above water in the name of growth. Are large farms less environmentally sensitive and more geared toward profit with their crop rotations?
Well, everybody has to be geared to more trade. What the hell are we kidding each other for? How are you going to stay in business if you're not geared for profit, whether you farm 1,000 acres or 100,000 acres? Okay, there's no difference. When you go to the bank or everybody, whether again 1,000 acre farmer can go to the bank, they'll expect it to uh, be conform to certain regulatory thing conditions as a 100,000 acre farmer. So profit is you have to everybody has to make a profit, otherwise forget about staying in business. And it's a very capital intensive business.
Andy Keene is asking, good morning, Andy. Good to see you. Robert, considering the fact that most in agriculture consider land as the holy grail, what is your opinion of renting versus doing whatever is possible to buy the land if it's available?
I look at it as a business transaction. If I was in their shoes, if I was a producer, I'd look at how much can I rent that land for, and if it's at 50% or discount, I'd look at it, and then during good years, squirrel some money aside to buy the land. And you can't, if you buy it right away, you could be in problems right away. Because if you're paying 5% interest on 5,000 acre land, so 5 times 5, 250 equivalent, you're paying to the bank interest. And if you can rent that land at 150, well, there's your $100 that you can put away as towards the purchase of land down the road when you're ready. Don't do it too soon. You do it too soon, you're going to be in problems with cash flow.
Casey Dean is asking, what could have Monette done different to avoid their bad year but still scale?
I don't know if I hate to guess somebody like Daryl that can handle 400,000 acres seed. That's I wouldn't second guess him. He done a lot of good things that nobody's giving him credit for. Maybe he did expand a little bit too fast, but I don't know if that's the problem, or maybe the problem is uh, focus. I personally like to focus. I don't go into 10 different, 5 different businesses. But then again, that's me. That's how I handle things. 100% focus. That's all I do. No, even I think gold and silver gonna take off like crazy, and possibly or oil even it could potentially go to $150 because analysts aren't giving it enough uh, demerit points for or what, however you want to term it. Uh, that the lag period and how much facilities and pipelines have been destroyed. And you're not going to replace that in 6 months, a year, or even two. So we'll be paying this higher oil price a little longer into the future. Anyway, I'm not invested even in that, although I am a firm believer that it's a good investment.
Good point about focus. John Gibson is asking, what are your thoughts on the U.S. land trust scenario and how that influences production, agriculture structure compared to our Canadian system?
I don't know enough about it. Like I said, once I discounted U.S. From investing into it because of the drought and the water problems. U.S. is depleting their main aquifer, the Aquacala or whatever it's called. It's a weird name. Uh, it runs down the center of the United States. It's being depleted so fast that they would take thousands of years to fill it back to because that's how long it took to fill it initially from the last ice age. So the, that water depletion is at an alarming rate. And it's not just rainfall or lack of rainfall, it's the depletion of all the main aquifers at far faster than the replenishment rate.
That is an issue. That is an issue for some of those folks. We're blessed with so much water here, maybe a bit too much this spring at Langenberg. But the Hoover Dam ain't what it was. I hear it's
Well, none
maybe
of them are because that's a big uh, fed by the Colorado River, and none of them are. And there was a question about the rural communities.
absolutely. Keith Vanderhyde is asking, what future do you see for smaller rural communities as farms and landholders get larger?
Well, the smaller communities have been dying for hundreds of years, 100 years back. You can go, and not much has changed. Yeah, and I see some hubs remaining, like the ones that, like let's say the bigger cities, like Yorkton, Swifter, and Brandon, in your case, and the, for supplies and uh, parts and everything else. But the smaller ones, I don't think have much of a lifespan left.
Hmm. We're
And I
45
think
minutes
that
in.
goes back long before Monette's time or my time or anybody's time, hundreds of years back. They've been on a constant decline, and that decline will continue.
Okay. Well, we're 45 minutes in. I would say halfway through. We've had great questions. I want to get through some of these predictions and then to what you're going to talk about going forward. And so, number one, Saskatchewan farmland was still cheap. Number two, you said to lock in rates. Number three, commercial real estate bloodbath taking down U.S. regional banks in fall of 2023. And then in January, you said it the same thing. Do you want to talk about that? I could read out all these stats. It's in the paper, but why don't you just tell us how you did on that one?
Well, in my view, it's 100% because I wouldn't touch it with a 10-foot pole, commercial real estate. And I know it very, very well. I spent most of my life in it, right up to what, 63, 64. When I was 63 or 64 when I sold out. Uh, so I wouldn't touch it, but it's far worse than like when I talk commercial real estate, people equate it to, let's say, commercial real estate in Regina. It doesn't have hardly anything to do with commercial real estate in Toronto, Vancouver, New York, Dallas, and San Francisco, and all around the world. You look at that's where most of the money, banks' money, is invested, and it's definitely got a long way to go, and it's been propped up by this extend and pretend policy by the banks, where they give you money or they cut the terms and the loan and everything else, anything just so they can stay on their book as an uh, as uh, what do you call that when it's meaning the obligations. It's not in default.
Covenants.
Anyway, I wouldn't touch it.
Okay.
So
And capital availability squeeze, how did you do on that one? You came back from Toronto in January talking to 20 or 30 lenders. Banks pressured by their own commercial real estate losses, pulling back, LTVs compressing, capital being available. We covered a lot of that today. I don't know if we need to go into that again, do we? Do you have anything to add to that?
well, no, I don't think so. The capital availability was covered very well, and it's everything's in process in being implemented, and it's just going to the next step. So the first steps that I read, those were or that I talked about, were are all in right now. Now it goes to the next step where it gets tighter.
Riley Wallace says, I would kindly disagree with Robert's rent/buy analysis. Here's why.
No,
$5,000 an acre land at 5% is $250 an acre at beginning of term. But if you average the interest costs over 25 years, it's $150 an acre. So if rent is $150, then to me, it's a no-brainer to buy if debt can be serviced.
well, I agree 100%. The key is if that can be serviced. That's it.
So
But
if you can afford to buy it, it's not an
that's
issue.
all what I'm doing. So how can I tell you not to buy when I believe it's the best darn investment around? So no, you can buy definitely if that can be serviced. That's the key.
Derek Talon's asking, what is Robert's opinion of the FCC farmland affordability study that shows Saskatchewan now has the worst affordability index in Western Canada?
Affordability index, what does that cover? Producers or does it cover? I don't. I never really looked into it.
Derek, can you give us some more context there? We're going to keep going on the predictions. So you said farmland would hold through the squeeze. So far, so good. It's looking like we haven't seen a meaningful dip, a little bit slowing on buying maybe, but it's still up as far as we have the recent reports. Hey, number 5, farmland holds through the squeeze.
There.
Okay, we got a link there.
Yeah.
Canadian farmland affordability trending down. Well, yeah, 6.5 minute read.
Yeah, that's fine. It can. Nothing goes up forever. Okay, and that what doesn't matter whether you're on farmland or you're a producer or whatever. You can expect ups and downs in any one asset class. So farmland going down a little doesn't matter. It's a part of the market.
You've been talking recession since 2023. So the verdict to hear it saying is early, but I still don't. I mean, and sometimes you hear, hey, we're in recession, this and that, but how do you think you scored on your predictions of recession?
Okay, let's get back to the real numbers. Never mind the BS that the government gives you. Okay, so by common rule of thumb definition in Canada, Canada is technically in a recession as of mid 2026. Statistic Canada's reported. Okay, so then what are you talking about? You're talking about Q4, sorry. Q4, fourth quarter, in other words, of 2025, GDP, gross domestic product, contracted. Q1, 2026, GDP was flat to slightly negative, depending on your measure and how you view these items. So that gave Canada 2 consecutive quarters of declining annualized GDP, which is the standard definition of a technical recession. Okay, if I go back to the real bad recession, 2008, December, from what I remember, going 100 years back, um, December 2008, they made the recession retroactive back to starting, in other words, in December of 2007, because they need the data. They can't, they don't work on forecasts or anything else. They need the data in, and that data gave them the nerve to call the recession or the right to call the recession. So for farmland, what does that do? Important question is not whether Canada meets the textbook definition of a recession, but whether credit conditions tightening, and the front there is considerable evidence that the lenders have become more cautious and capital is more selective than it was several years ago. And I think just about everybody going to agree on that point, or anybody that tried to get a loan just recently.
Try to get a bag of groceries.
Yeah.
It's expensive. Okay, well, that's really cool. We had some more questions coming in. Good justification there with numbers as usual. I don't find you wanting for preparation. Ken Modiak is saying running a grain farm while buying farmland is essentially meeting two objectives. And I think that's a great conversation we've been having on the channel is the difference between real estate and farm production, two businesses. The production unit provides a cash flow and supports your living. If there is a surplus, investing in the farmland you are renting is building long-term multi-generational wealth.
Agreed.
Agreed.
And that's exactly what I'd do if I was farming. I'd buy as much farmland as I can, but still meeting the cash flow restrictions.
Well, there's still time, Robert. You just go down to the John Deere dealer and get some iron and get
I
going.
hate iron, you know that.
Yeah, I know
It's
that.
always breaking down. So even the new stuff,
Well, why the hell are you driving a Dodge then?
because I don't want your Ford. It's even worse.
All right, Derek Talon is clarifying it's a land payment as a percentage of revenue is the affordability index. So we're talking land payments as a percentage of revenue now. And of course, land keeps going up, but the revenue is taking a dip here. Saskatchewan was most affordable 15 years ago and is now the least affordable. Not exactly sure how FCC crunches those exact numbers. If anybody has perspective, but Jason Dearborn is saying, with David Dodge's comments last week, do you concur that Canada will likely face 6 to 7 more quarters of retracted growth?
Which one?
David Dodge's comments last week, talking about 6 to 7 more quarters of retracted growth.
Yeah, well, okay, that's even putting us further into a recession. I just read you the one that they uh, swept under the carpet. They didn't want to address, but you are technically in a recession. Okay, and okay, so then you look around the world because I do global. I don't do Canada just or U.S. I do global. You look at Germany's in recession and has been for how many a year or more, or definitely. And then you look at EU country, other EU countries. So there's a lot of evidence of recessions all around the world.
On the interest rate path, it says technically you've been half right because we're currently lower. It did not hike in 2023. It held at 5%, then cut to 2.25%.
Okay, well, I don't want to argue those points because they're being manipulated by every country's manipulating as much as they can to kick the can further down the road. And so it's look around you. What can you borrow at? What are the rates at? And no, they have not addressed the unemployment issues. With the unemployment issues, 6 point whatever percent Canada's at, and U.S. Is far higher than what they're talking about, or what they give the numbers to the public. My thoughts were that the Fed chair would panic and lower interest rates. Now they're caught between lower interest rates, the Straits of Hormuz, forcing the uh, oil prices up. So they're caught between if they go if they decrease interest rates, that'll cause further inflation. If they go up, it'll kill the economy more. So it's not an easy path. So it's not just black and white. This is the right thing to do, and they're maneuvering it the best they can, or what they think is best. And I
You
don't
said
agree with them most of the
you
time, but
you said oil $150 to 200 on chronic underinvestment in supply, but we did get war, and we did get the Strait of Hormuz, which we'll go into on your bullish thesis.
okay, what you have, let's look at 1979, 1980, 81. They had different causes. One was the revolution, the other one was the oil spike and this. But anyway, let's look at those. During that period, the oil shock was 5 to 6% only. Okay, today Straits of Hormuz, everybody kind of come to grips with a number of 20% up to 25%. So how does now that oil shock caused a recession and everything at 5-6%, and now being 20% and 25% potentially? How do you get away without it causing a recession and the oil shock? And the prices will definitely go up.
Okay, and the last one we're going to touch on here. Well, although it wasn't in here, you did call the gold to 5,000, which I'd wish I'd bought. But you were saying stock market cut in half. Haven't quite seen that yet.
Yet is the key word. That's why I hate timing. Okay,
Uh-huh.
my timing is strictly when are these guys gonna be forced? When are they gonna hit that brick wall at 100 miles an hour? And they got no choice but to do the right thing for what the economics 101 dictates. Okay, so they're kicking the can down the road constantly.
How do you feel Robert did with his predictions performed in the past? Putting it out there, Robert. We're going to see what the folks in the audience think. There's a couple hundred on the call. We'll get your take here, but let's shift gears. You had a very strong message, and we want to get to that. The new call, the super cycle that you're very excited
Before
about.
you go any further, I'd like to add
Okay.
because I really don't care for marks. You can mark it. You can give me a mark, whatever you want. What I look at is where did I put my money and how am I doing financially? Because
Wow.
I actually implement all that.
It's a
This is all
different poll.
implemented into my into my investment theory.
You can have all the money you want, Robert, but being right, that's priceless. A man wants to be right.
Yeah, but you're right. If you made money utilizing all those choices, right? Or
Right.
if I lose money, well then they were wrong. Okay, go ahead.
Andy Keene is saying index funds. If it wasn't for the stigma family farms face about generational farms, as in you can't sell the family farm, is it not simple math? 10% on 20 million is 134 million in 20 years. 10% on 20 million is 134 million in 20 years. Do you think the land will appreciate that much in 20 years is there?
Well, if I was to have asked you when I was buying land only at 2010 at $400-500 an acre that it's going to be 4,000-5,000, you'd say I'm crazy. Okay, so let's leave it at that.
Let's leave it at that. Yeah. You are crazy, but we love you. Pat McCarthy says, thank you. Well done to everyone. Jason Dearborn says, why do you have the position that equity markets will collapse? SpaceX just purchased an AI company in stock swap, creating $60 billion. Why will this method disappear?
Well, the reason for that, Jason, is you look at U.S., for example, and Canada's not much different. Uh, Consumers, 60% of the GDP. So in other words, that economy goes as the consumer goes. And if both countries, both Canada and US, the consumers all tapped out with their credit cards limit and defaults rivaling 2009, how can who are you going to sell those products to?
How many people do you think rated you very accurate? What percentage?
I don't know. Very accurate.
Very accurate.
10%.
35% of folks said you're 3.5 times what you predicted, said you're very accurate. 3.5
Like I
times.
said, my
Extremely accurate.
tells me whether I'm accurate or not.
Somewhat, lion's share is saying you're somewhat accurate. 7% said you're not that accurate, but nobody said you're out to lunch.
What do you
Nobody.
mean? They got 57. Oh, I thought it was 57% said I'm out to lunch. Okay,
No,
anyway.
nobody. Yeah, nobody said you're out to lunch, Robert.
Well, the economy tells you, people can say what they want, but
They do.
the
They do.
economy and whatever the predictions were. Don't forget, these predictions were made most of them were made 3 years ago, long before any of this started to happen. And then there's the politician and their whims.
Yeah.
Uh, Trump can wake up tomorrow and say whatever the heck he wants. So geopolitical issues that are beyond anybody's control. But you still have to go by economics 101, and is it possible? I, as a consumer, can I do that, what Trump is telling me to do or not telling me to do?
Okay, we want to get into the new call, the super cycle, but we got one question here from my neighbor as the crow flies from back home. Blake Duchek, how's it going, brother? What do you see happening with the Canadian cattle industry? Is the market going to stay up due to the record low cattle numbers with hardly any new cow-calf producers starting up and the older guys exiting due to record high prices?
Well, I made this call like in a restaurant, like I go to. I have a lot of cattle producers. I'm in southwest of Calgary, in the foothills country. So I got a lot of cattle producers, and they ask me that question a lot. And even 3 4 years ago, I told them that number one, they were selling cattle, uh, even the breeding cattle. I don't know much about that industry. I don't follow it. I just look at it from outside looking in. So they were selling the breeding cattle because of the droughts and everything else. I said, well, eventually they'll have to replenish that. That included Texas and the whole of North America. Okay, then you still got the normal consumer demand, plus you're going to have to replace those breeding cattle. So I knew this hot cycle was coming up. Where's it going to go? Uh, I don't see it really changing all that much. Until they replenish the cattle in Texas and all over North America, and then have until it comes to an equilibrium where you have the breeding cattle and you have the market demand, and the two are in a uh, equilibrium to each other.
I had the best ribeye last night. It was heavenly. One of the best things on planet Earth, eh? Good ribeye. Robert, is
Yeah,
that your cut?
$50 or $100, whatever,
Who cares? Who cares? It's priceless.
for some.
Yeah. George Callan Ferguson is saying, is your land rental agreement straight cash per acre? If so, are you happy with paying passive income tax? Are you happy paying passive income tax?
Sometimes I'm happy just to be able to pay tax. That means you make money. No, I don't begrudge it, man. Like I'm an immigrant. I came to this country, and the way I look at it, when I pay millions of dollars in taxes, it's all kind of repayment for accepting us here.
Oh, that was great. Yeah, you were celebrated by the Croatian, your community awarded the Lifetime Achievement Award or something of that nature the other day in Ontario. Hey,
Yeah.
that was awesome. Question. I saw it on the internet, Robert, that you're raising your land prices by 50% as any evil land baron.
Yeah, but when depends the base. When you're raising it from $40, of course, it's going to be the percentage doesn't matter. It's what's in that area, and so on. So, because with our 5 year leases, we're constantly behind. Other investors, they all want 2 3 year leases only, so they increase in between, and we never had that. So our stays low because we try to give you a 5 year lease. What will a 5 year lease do? Well, it'll let you put on the fertilizer and all the inputs properly, because you're going to have it a lot longer. If you have it 1 year only or two, well, you're not going to do the same. You're going to be cutting corners because you don't know that you're going to have it next year. So that's the reason we go 5 year. And then if it was 10 year, well, then the shock would be that much greater. Now we have some longer ones.
Okay, well, we want to get into why you're so bullish. Do you want to lay out that case? Do you want to go element by element here? Do you want to start with the weather or geopolitics or
Well,
commodities?
I'll cover it basically the way my line of thinking went.
Please.
So I cover, of course, globally again. So the problems, geopolitical and the wars and everything. So it's the Iran war, blocking of the Straits of Hormuz, uh, the Ukraine war, developing a very strong El Nino, potentially super El Nino, uh, and then droughts in the crop producing areas, water depletion in the aquifers that were mentioned earlier, globally. There's globally because they're occurring in US, they're occurring in China, they're occurring in India, Pakistan area, the main ones I'm talking about, and how that'll all affect commodities in the future. Uh, my thinking is that if two or three of these uh, things come together that are detrimental to crop production, it'll severely curtail crop yields globally. And anybody that has a product, even uh, I'm talking cereals and pulses and so on, that can fill those voids is going to be a beneficiary of all that because the other ones are going to have to make up their imports, increase their imports, and if they had sufficient product of their own, that they will with the diminished local production, they will have to import that much more. So then I go on probabilities. Agriculture commodities super cycle odds are, in my opinion, 65 to 75% from 26 to 28. Okay, so that means the scenario. Let's say put some scenarios up front. Normal volatility, no true super cycle. I probability, give that a probability of 20 to 25%. So in other words, prices spike but fade within 6 to 12 months. So, and then the next one is the moderate ag super cycle. I give that a probability of 45 to 50%. Wheat, oilseed, pulse, rice, fertilizer, sensitive crops stay structurally high for 2 to 4 years. That's the moderate one. And then the super cycle is at 20 to 25%. But in order to that, for that to happen, you have to have multiple breadbasket failures in multiple countries, Australia, China, uh, Brazil, or a combination of them. So then you have to have multiple breadbasket failures, and then plus energy fertilizer shock, plus export bans, which will happen if they're concerned about their own inventories. Grain prices could double in parts of the market. Scenario, probability, extreme food security crisis, which is on the table. That's only 5 to 10%. But that means Hormuz disruption persists, El Nino becomes extreme, and several exporters fail together. And then why the odds are high. The setup is unusually combustible. Energy shock risk is real. Reuters reports Hormuz traffic has been severely curtailed, and Hormuz normally handles roughly one-fifth of global oil and LNG flows. That directly hits diesel, freight, fertilizer, chemicals, and irrigation costs. Number two, the El Nino. El Nino risk is building as we speak, and I think some of those analysts are calling it as a super El Nino, which goes back to I think the last one, 1977 one or thereabouts. Uh, so NOAA has an El Nino watch as of May 14th, 2026, and WMO says El Nino is expected to develop from mid 2026. China also expects effects to peak in autumn or winter of 2026. India is already flashing risk. Water is structural issues. The probability of a genuine ag supercycle is now better than even. But the key distinction is this: the supercycle does not require global crop failure. It only requires tight stocks, energy shock, weather problems in 2 to 3 major exporters, plus government export restrictions. The combination now is plausible. I don't want
That's
to percentage, but
you what? Sorry.
I don't want to go with percentages of when. But LD with most of this is forming, and some of them are in place already as we speak.
How high and when? I'm sure everybody's wondering. How high will commodities go and when? I mean, you've got it broken down by probabilities, but you did talk about the potential for doubling some of our main crops here, wheat and canola.
Uh, okay, the biggest beneficiary is Canada, of course, and Russia. Okay, so what does that translate into probability? I'd say 65 to 70% for the super El Nino. And how does Canada benefit? Canada benefits because it's in the northern tier of that. And we have the oil, we have the chemicals, we have the fertilizer, we have a lot of these things that other countries cannot get, even at the high prices.
We had a question from Jason Dearborn. Robert, have you attempted to enter your thesis through AI and created a data lake from those sources you have cited? You did send me a PDF that you put through ChatGPT that you made some notes on. I can try and get that and send that to you folks here. I'll get that link. But we have actually worked with a GPT that we made of you that thinks like you, which is always interesting to ask. But how are you working with AI? What did it say about your predictions?
Well, let's face it, AI looks at backward looking data. They cannot project much forward, maybe a little bit, but not much. Okay, when you look at investing with the masses, it very rarely works out. Quite often, the M is silent. Let you figure it out.
Oh, Robert.
Okay, so there's very little money made looking backwards. You have to look forward, and you have to extrapolate today's conditions and limitations into the forward-looking model.
Well, maybe AI can't produce the future yet. It's getting smarter, Robert. It's getting smarter. I'm going to try and dig up that link for you folks. Casey Dean says, I've been bullish on wheat since October. Nobody wants to grow a crop that loses money. I talked to a market fellow yesterday who was very qualified, and he's fairly bearish on wheat, actually, given stocks and all that good stuff. But well, we're getting close to the top of our time together. I was thinking it would be 90 minutes. Robert, is there anything that you wish that I had asked you that I have not asked you yet?
Oh, you covered it pretty good.
That's why you pay me the big bucks.
The Straits of Hormuz, like they play a big role, of course, with the rest of the world oil limitations, and but it's not just oil; it's sulfur, it's chemicals, it's a lot of different components that you use because you can't have a complete, let's say, fertilizer without some of those other additives like sulfur and what sulfur mixed with other ones becomes, and so on. So Straits of Hormuz play a big role now. When they opened them, you called me and you said, "Well, that'll change everything." No, it doesn't, because
World peace. There's world peace, Robert. What do you say now?
well, even though they're open, how do you make up all that shortfall for what January, February, so March, April, May, June was almost 4 months, 3.5 months. How do you make that up? They drew it from petroleum reserves like U.S., Canada, and the rest of the world, China and the rest. Okay, how do you replenish those reserves? It'll take time. It's just like we talked with the cattle industry. We're paying the price now, but that's 4 years after the fact. They started culling and selling the breeder stock and everything else. So it's the same thing with this petroleum and the rest of the chemicals and everything that goes with it. It'll take years because they bombed each other's distribution facilities, pumping the storage facilities, because you can pump all you want. Where are you going to store it if you don't have the storage facilities? The pipelines, and that all takes years to turn around and rebuild.
Well, and most people don't realize those big tankers run the speed of a bicycle. So a lot of the boats did not get to their destination until this spring. So we're just going to see the effects there. I've found
Well,
hey, go ahead.
okay, before the crisis, roughly 125 vessels crossing per day were typical. So today, there's about 400 vessels waiting within that straits there to cross. Reuters reported today that, or yesterday, that was, tanker movements are increasing but remain well below pre-war levels and drastically below. My best estimate from the current reporting and traffic and so on is running roughly 30 to 50% of normal capacity. Don't forget their mind also. So then you have the insurance companies, they're very reluctant to reinsure those that are going through those minefields. Okay, that's about it for.
Yeah.
You can extrapolate the rest of it.
Yeah, hopefully folks can go out and make their own fortune on planet Earth with this incredibly valuable information brought to you by Growing the Future. Jason Dearborn, Robert, do you see a rise in direct from excuse me, do you see a rise in direct from farm to food processor markets through container shipping?
Well, it's something the public has been asking for, or most of them want it from farm to grower to consumer direct, yes. But I think with those shortages, that's going to be put on a back burner because they're going to be concerned with, can I get that food? Supply and demand. Once the demand outstrips the supply, a lot of different wishes go down the tube.
Do you buy it? I'm sharing the results of what folks thought about our conversation after hearing Robert's thesis. Are you more bullish than ever? 23%, Robert, are more bullish than ever. 66% are unchanged. And 11% of folks, God bless them, are charting their own path. What do you think of that?
Well, I don't know. I changed because I'm certainly not unchanged. I've changed, and I've grown bullish because I don't think the economy, the geopolitical issues, and everything else is going to. They can't play as big of a role as they did in the past. So, in other words, you can chart your course towards bullish is much easier. Uh, that's my opinion.
Well, we value your opinion. We had hundreds on the call today. That's where we're going to end it. I'm glad to see that you're bullish. It gives me some hope. Lars Rogers is saying, interesting discussion. Land is still a good long-term investment. The stock market is likely still a good long-term investment in spite of Robert's opinion, but I agree that there's likely some tough conditions coming sometime in the next 5 years. Casey Dean is saying thank you. Jason Dearborn is saying thank you. Robert, you had something to add?
Well, I don't agree with that next few 5 years or whatever. I'd say a lot sooner, like by the end of this year.
Chris Sobchuk is saying cheers. Michael K is saying thank you to both. I appreciate you, Robert. You said this is the last time you're coming on the podcast for a little while. You only want to come on when you have something to say. When will you come on again and share your wisdom? Obviously, people
Well, if
want to
things
learn.
change drastically and I have some different news, yeah, I'll share them because my research just tells me by sheer probabilities what will happen or what should happen. Now, the politicians and central bankers and so on have their own say and as to which direction they'd like to see it go, but can they implement it? That's the question.
Kevin Hirsch is saying great session. Thanks. And thank you for the work that you're doing there, both as a farmer and a journalist. Kevin, we enjoyed having you on the show. And Lars Rogers is saying, well done. To clarify, Robert, it could be up to 5 years to recover. I'm not sure when it'll correct. And Andy Keene is saying, good on you both, Dan and Robert. Thank you. Great info and appreciate what you do too. Andy Leaf Sneathan is saying, thank you for sharing your thoughts, Robert and Dan. So lots of people appreciate what you have to say. Big round of applause for Robert for sharing. Despite all the mudslinging and everything that you continually to take from the agricultural community online, I see lots of folks disparaging you often, but you seem to take it all in stride and get a little chuckle and keep going, and you offer your wisdom for free. Well,
comes with the territory.
But here's one thing to end it all. To those that would say, well, of course you're bullish. You're in the business of renting farmland.
That doesn't mean I invest according to that. That I invest according to the numbers.
Okay. He invests according to the numbers, folks. Put that in your pipe and smoke it. Put that in your pipe and smoke it. And that's where we'll leave it today. Thanks so much. Check everything out at growingyourfuture.ca. We still have some spots left for the Growing Your Future operating system for cohort 2, August 4th. It's been so much fun. The people that we're working with in the group. And so many good events coming up. And I promise you, we're just getting started here, growing the future. Thank you, Robert. We're having a lot of fun working together. We're working on your book, your tell-all book of your life, which is very interesting. So hopefully we'll get that done soon and getting all the wisdom down on paper. But thank you, Robert, for everything you do, and appreciate you coming on the show.
Thank you to all your audience.
All right. Have a great day, everybody, and good luck out there. Stay safe, and we'll probably see you soon. Chris Sobchak says, can't wait for the book. Well,